This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Dana Myers of Myers EV. Dana, thank you for joining us.
Yes, thank you for having me.
So what was your background before joining Myers EV? What did you do before?
Well, my father was an entrepreneur and started a business up when he was like 44 years old in the basement of our house. And I remember when I was in grade school going down there and getting a nickel every time I would circle in these big books, a company that had over 100 employees, because that was his target market. And I followed that along for years. In the summers, I did laboratory testing because part of the business was electrical transformer business, and there's oil in there for testing. And after I graduated from college and worked there a couple of years, he promoted me to laboratory manager because I knew a lot about that. And as I was there, I noticed there was a problem with the field operations. I asked them to stop doing what they were doing and researched and tried to figure out a solution. Had to get permits from the US EPA because what we were doing was considered so highly toxic you couldn't even research it without a permit. And long story short, in the end, we came up with a new process and that netted like $10 million in its first year. Then my dad said, okay, you're ready to take over the company. And I started up a company division that rewound electrical transformers. After we rewound a transformer, I think it weighed 1.2 million pounds, 500,000 volts, came in as part of a rail car because it was too high to transport normally. A Fortune 5 company saw that and said, hey, we want to buy a big chunk of your business. We want to buy that and your South African operations. And we were doing about 55 million at the time. So they ended up buying that. And that was what I was doing before I got into electric vehicles.
Well, great. So what led you to start work in the electric car space then?
Well, have you ever been captivated by something? For me, it was a book written specifically to big companies on how not to get disrupted. But to me, it laid out a plan on how to create $1 billion business right under the noses of multi-billion-dollar companies. And then it used electric cars as an example, and I was instantly obsessed. Perhaps because of the payoff, but also perhaps because I started driving right after the OPEC oil crisis. I was in college. I read this article in the Wall Street Journal that the Honda Accord got an amazing 50 mile per gallon on the highway. And I knew that was just the car for me. And when I graduated, my dad said, I'll buy you any car you want. And I wanted a Honda Accord because it got 50 mile per gallon. I think he was very disappointed. My brother got a Fiat Spider convertible, and that made him happy. But anyway, I just like energy efficiency, I guess, for some reason, or maybe just don't like the oil thing. But I couldn't put down the EV, so I started investigating them. After about 4 months of investigations, I was trying to find a business model that was profitable, something that the big car companies wouldn't do, and something would hit a low price point and still be high quality. And somebody pointed me towards a vehicle called the Corbin Sparrow. It was one person. It was all electric. They had 300 buyers and many more people who wanted to buy it. But they ran into some financial difficulties. So fortunately, at that time, we had some money. We bought about 60 vehicle shells, upgraded the mechanical and electrical systems, and built 50 of them out. And the whole idea was, we don't know anything about electric vehicles, so we're going to learn it by doing it, and we're going to build vehicles, put them out in the marketplace, sell them, see what people buy, see what they like, see what they don't like. And so that's how we ended up learning to start Myers EV, that what we really needed was a crash-tested, airbag-equipped, 2-seat, 4-wheel car that had 70 miles of range. And it was to be positioned as your commuter car, as your round-town car, as your second household car. And by our accounts, we could build it profitably using the $7,500 tax credit and still hit a mass market price point of under $20,000. So that's why Myers EV.
Well, you've studied the electric car space, and for investors out there, what's your advice to them about investing in this space? What should they do before they write that first check?
Well, I would say there's only two places to invest in the electric car space. One is maybe Tesla, and the other is us. Why Tesla? I believe Tesla is so far ahead of the car companies in what they're doing. I think the car companies are going to have a hard time catching up to where Tesla is technologically and market-wise, sort of like an Apple situation. And they have a lock on all the electric cars that are going to be $30,000 and above. Myers EV, there's still room in the market for a sub $20,000 electric car, maybe even under $25,000, because that's the mass market price that nobody's addressing. Everybody else is going after Tesla, and I just don't think anybody can succeed against Tesla, not even GM. So that would be my heartfelt advice.
Well, great. Well, let's talk about the state of investing in this sector. How is the industry evolving? What growth rates are we seeing out there for electric cars right now?
So the growth rate of electric cars is very interesting. There's 46 different models of electric cars in the United States that were sold in 2019. Of those 46, 3 of them were Tesla models. Those 3 Tesla models outsold all the other 43 combined. And the shocking part of it is that out of 17 million new cars and trucks sold in the United States last year, less than 330,000 of them, of those sales, were electric cars. So Tesla has a big chunk of a market, but that is puny compared to the big market. And the even more shocking aspect of it is electric car sales in 2019 went down from 2018. So all the hype that you hear about electric cars and all these models that are coming out, it's a lot of hype. And yes, car companies are working devilishly to get electric car models out there, but the problem is people aren't buying them. So the question is, why aren't people buying the electric cars that the car makers are putting out there? Number one, government regulations is why the car companies are building electric cars. It's not customer demand. It's not profits, because they're not making a profit on their electric cars. It's things like Paris banning new gas car sales after 2030. It's the UK banning gas car sales after 2035. It's France and China banning gas car sales after 2040. It's the EU cracking down on emissions, which is basically paying, FCA is basically paying Tesla to set up a plant in Europe just to avoid hundreds of millions of dollars of fines. So government regulations are driving EV sales, and when you see governments reduce their incentives, electric vehicle sales drop. So what happened in 2019? Tesla's tax credit ran out. You get 200,000 buyers at that $7,500, and then it starts tailing off. GM hit their 200,000, so they're dropped off. So what does that tell you? It tells you that EV sales are super price sensitive. For example, Tesla was selling the Model S at what, $70,000 to $100,000. When they went to a $35,000 model, their sales volume increased 5 times. EVs are super price sensitive. So that's sort of the state of investing. The other thing I'd like to say is just this comment that I read a couple years ago. I think it was from the head of VW, but I could be wrong. And they said, look, it's a 50-50 chance that the car companies are going to make the jump to electric cars from gas cars. And startups like ours and like Tesla used to be, and others see that opportunity as saying, look, they're going to have a hard time getting rid of all their profitable gas cars and switching over to electric cars that aren't even profitable for them. So that creates the opportunity for investors and investment.
Do you think we'll see more companies coming to engage in building electric cars out there, or do you think it will remain the same number of players as now?
Well, one of the examples that I'll use goes all the way back 110 years ago when the new technology was gas cars. There was 253 different models of gas cars out there. And then Henry Ford came out with gas car that was like half the price of everybody else's. I think in today's terms, it was about an $18,000 car is what the Model T would be in today's dollars. And he cleaned up the market, and within 20 years, there was more gas cars than electric cars. So there's a lot of people that see this opportunity. This is why you see three-wheel companies building three-wheel electric vehicles, because they're trying to hit a low price point, and they're trying to do that without going through the regulatory requirements of making four wheels. Because once you go from three wheels to four, it's a car. So, I mean, you see a lot of people going into the car space, but this goes back to why I said invest in us or invest in Tesla, because everybody's going after Tesla, trying to beat Tesla, trying to make luxury cars that are better than Teslas. And you know what? Tesla had to get to 400,000 cars a year in order to get really close to profitability or break into profitability for 2 quarters in a row. I don't know how you get to that kind of volume as a startup. So if you're going to compete head to head with Tesla. So that's why we're going at the lower end of the market where the most consumers are. And quite frankly, it's something like 30% of consumers would like to help save the environment. That's the number one reason people buy electric cars. They want to save the environment, but they're not going to pay more money to do it, or they can't pay more money to do it. So you have to have a car that's actually better than a gas car, cheaper than a gas car to tap that market.
So what are the challenges in the space for electric cars? Is it the regulatory? Is it the market? Is it the technology? What's holding them back from reducing that price point to get more customers?
Well, that's a great question. And it's because we have 110 years of believing that a car means it has to seat 4 people, it has to be good for long ranges, and it has to be fueled up in 5 minutes or less from any of a million different places. But if you think a little bit outside the box, and that's all the electric cars out there. So you see battery packs that have 100 kW of batteries or 60 kW of batteries. I mean, lithium batteries are expensive. And in a sense, batteries are basically your gas tank. And so you're paying $10,000, $15,000, $8,000 for your gas tank, and then you're trying to compare it to a gas car. Well, it's just not going to work. But if you think outside the box and you look at how people actually use their car, for example, next time you're driving, count how many people are in the next 10 cars you see. Count how many your cars have just 1 or 2 people in. Count how many have 3 or more in. Very few. It's something like 1 out of 10 cars has 3 or more people in the car. So by making a car for commuting and local trips, which make 70% of all car use is 1 or 2 people going less than 40 miles. 80% of all car use is 1 or 2 people going less than 60 miles in a day. Those are, and you build a car for those ranges, and now your battery pack's less than $3,500, and now you can build a car that's profitable using the tax credit to start and low volumes. The big problem for investors, one of the bigger problems with investing in the car space is that it is probably 18 to 20 months to go through airbags, crash tests, ABS, ESC, all those regulatory requirements. And so they're like, well, shoot, nothing's going on for 2 years. Well, something would be going on, which is you're going to be pre-selling your first year of production. So by the time you get out through the regulatory requirements, you can start production immediately and be profitable in your first year. So that's how we're solving that problem. And by making cars in micro factories, instead of saying a car has to be built in a $1 billion factory that's equipped with robots, our 3-wheel EV experience taught us, one guy could actually assemble our whole car, our whole 3-wheel electric vehicle in less than 40 hours just using simple hand tools. And that wasn't even a vehicle that was made and designed for production, which is one reason we decided not to do it, because it was just so ridiculously inefficient to build. So being able to get to market without spending hundreds of millions or billions of dollars with a new kind of a car that fits how people drive is actually how we solve the challenges most investors see with this car space.
So where do you fit on the pricing landscape there with it?
So if you look at the average gas car today that was sold in 2019, the average new car, gas car sold for $37,700 and change. The average electric car is much higher than that. So, and 2/3, this is an interesting statistic, 2/3 of all car sales in the US are used car sales. They're not new car sales. And as cars put more and more technology on the cars and the cars keep getting bigger and bigger, the cost keeps going up. And I think personally, this is one of the reasons why everybody's going after mobility, because by the time you put all the mobility stuff on your car, it's going to be too expensive for people to own cars. So what we're trying to do is we call our car the 0.5 because we call it the half car. It's half the price, half the pollution, and for more than half the driving. So we're aiming at a sub $20,000 price point where we can be profitable to 1,000 units a year. So that's what's going to drive sales. And a sub $20,000, let's just put it that way, electric car is so efficient that by the time you buy that car and pay for fuel for 100,000 miles, you're $27,000 less expensive than buying a gas car and fueling it for 100,000 miles. And obviously, a $20,000 electric cars is less than half of a 40,000 and up electric cars that everybody practically is building right now.
Let's also talk about the technology landscape. How far can you drive a Myers car with the current battery technology, and how do you see that changing in the future?
So this is the big divide. This is the out-of-the-box paradigm shift. Tesla's leading everybody down the road to say, we have to have a car that has 200 miles, 300 miles. Rivian's coming out 400 miles. There's a company saying, well, we can get 1,000 miles on a charge. So everybody's going after long range. But the interesting fact is 65 million households in America have 2 or more cars. So yeah, you need one car for long range, whether it's a car you can borrow from somebody, it's a car you can rent. But 87% of all car travel in the United States is 1 or 2 people going less than 80 miles in a day. So for 87% of all driving, you don't need and you're not going to use more than 80 miles. In fact, BMW, for example, and I think the early Chevy Volt with a V, they tracked their users and they said the people who use the electric cars basically drove 40 to 45 miles a day in their electric car, and then they used their gas car for the other stuff. Now, for the Volt, it was 40 to 45 miles, and then they had the gas engine for longer trips. So I think the future is a short-range electric car. I mean, why pay for and why mine cobalt for 100 kilowatt hours of battery when for a fifth of that or less, you can do 80% of your driving? So it only makes sense. So what we're doing is going to come, and I think we're going to bring it, but it's the only way that you can get electric cars in the foreseeable future to cost less than gas cars so that the mass market will switch to electric cars. And even if battery technology ended up getting down to zero, you still have the charging issue. A short-range electric car, you can charge it up from a standard 110 outlet at home, whereas if you try to put 300 miles of range into your car, you need a fast charger, and then you want fast chargers out in the public and all that kind of stuff. And it's so much simpler. Just charge up at home and drive around and go back. The fast chargers will come, but on the way to 100% electric cars, one car for every 2-car family is certainly a milestone that makes it much more efficient and cost effective and will drive mass market EV adoption, which is what we're aiming for.
Very good. So our last question is, so how best for listeners to get back in touch with you?
Our website is www.myersev.com. You can email me at dana@myersev.com. And you can always connect with me on LinkedIn.
Great. We'll put those in the show notes for any listeners who want to follow up. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Awesome. Thank you, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.